Hi friends, very recently I created this video which is 4 mutual funds to buy every single month and I got overwhelming response, so thank you for that. Many of you commented that Rahul, please create part 2 of this video. So here I am listening to all your comments, reading all your comments and presenting to you part 2 of 4 mutual funds that you can consider buying every single month. Before I deep dive into part 2 of the video, what I want to do is quickly give you a 30-second synopsis of part 1 video. So in part 1, what we learned was 3 types of investors. One is conservative, second is balanced, and third is aggressive. And what we primarily learned there was the allocation of the mutual fund types. So if you're a conservative investor, for example, then you should look at 80% of your money going into large cap category, 10% going into flexi cap mutual funds, 5% going in mid cap mutual funds, and remaining 5% going into small cap mutual funds. While if you're a balanced investor, then you can consider investing up to 50% in large cap mutual funds, 20% in flexi cap mutual funds, 20% in mid cap mutual funds, and remaining 10% in small cap mutual funds. While if you're an aggressive type of an investor, then you can consider investing up to 20% in large cap mutual funds, 20% in flexi cap mutual funds, 30% in mid cap mutual funds, and lastly remaining 30% in small cap mutual funds. In part 1 video, I also walked you through the best route to take when it comes to large cap mutual funds, and we also learned a step-by-step process how to find out good large cap index mutual funds. And in part 2, this video, I am going to present to you unbiased, factual flexi cap mutual funds approach. Throughout this video, I'm going to compare a lot of flexi cap mutual funds on various important parameters. With that, let's get this video started. What you see on my screen is a list of 26 flexi cap mutual funds. We are going to analyze, we are going to use various factors so that we can come to the top 3 or top 2 flexi cap mutual funds. So first thing what you see is on the right side is the SIP returns, because this video is all about mutual funds that you can invest almost every month so that you can get maximum returns, and therefore I am considering SIP returns here. So you see 1 year return, 2 year return, 3 year return, 5 year return, 10 year return. Now immediate question is that Rahul, SEBI introduced flexi cap mutual fund category in November 2020. How come you are showing us the returns of 3 years, 5 years, 10 years? My answer is very simple, that majority of the flexi cap mutual funds were in a different type of mutual fund category. So for example, Quant Flexi Cap Mutual Fund, which is extremely popular nowadays from the last 2 or 3 years because of extremely high returns this fund has given. It actually used to be called Quant Consumption Mutual Fund, which used to be a thematic mutual fund, used to invest in consumption stocks. And it got converted into Quant Flexi Cap Mutual Funds in January or February 2022. So the returns that you're seeing here is actually prior to 2022, the returns that you see for Quant Mutual Fund, they were all from when it was Quant Consumption Fund. So this is an extremely important point, because when we are analyzing the returns, the past track record, we need to keep this in mind that these mutual funds were not flexi cap mutual funds at that time. They were in a different category. Therefore, any returns prior to 3 years, we need to completely ignore here, right? I hope you get this point, and it's an extremely important point when it comes to flexi cap mutual funds. Now, if we quickly have a look at it, you will see that in the last 1 year from a SIP returns perspective, JM Flexi Cap Mutual Fund and Parag Parikh has given the best returns, 14%. Number 2 is HDFC and DSP, which is they have given 12%. And then you have a bunch of other mutual funds here that have given roughly 10% more or less. If you look at 2 years SIP returns, then JM Flexi Cap has given the best returns, as well as HDFC Flexi Cap Mutual Fund, followed by Parag Parikh. If you look at the 3-year data, you will see that the HDFC mutual fund has given the best returns, 42%. Also, Quant has given 42%. Now you will see that if you go back to 3 years, 5 years, 10 years, Quant has given the best return. Not because of any other reason, mainly because that Quant used to be a thematic consumption mutual fund. That is why it has been generating higher returns. But if you look at the last 1 year or 2 year SIP returns, you will see that Quant has given 9% in last 1 year from a SIP perspective, and from a last 2 years perspective, it has given 14%. So this is the position from a returns perspective. And if you look at the last 3 years, I would say that HDFC from a returns perspective, as well as Parag Parikh, has been more consistent when it comes to the returns alone. So far, if you're finding this video educating, then please hit the like button so that more and more people can be educated. Now, past returns does not guarantee future returns, and also we need to look at some other factors which are risk related, that how much of risk actually you are taking to generate some returns. So for that, what I'm going to do is go to the left side and we are going to have a look at some other parameters. The first one is AUM, asset under management. Generally, we are told that higher the asset under management, better it is. It does work for majority of the mutual fund categories, not for all of them. But if you look at the flexi cap mutual fund category, it actually doesn't really matter. So if I just sort it out by AUM, you will see that these are the top 6 or 7 mutual funds that are best in terms of the higher AUM. But to be honest, from a flexi cap mutual funds perspective, it doesn't really matter. But if we more importantly look at the other risk related factors such as the standard deviation. So let us go ahead and sort this list out by the standard deviation. Now, standard deviation simply means that, for example, if a mutual fund on an average gives 20% returns and its standard deviation is 10%, meaning the return then it can give you is 30%, 20 plus 10 or 20 minus 10. It can go down up to 10%. So it will vary between 10 to 30 given that it is average giving you 20% and its standard deviation is 10%. So it actually shows you how much of volatility mutual fund is likely to give you. Now, lower the standard deviation, better it is, because the fund is going to be more predictable in future, right? So from that perspective, if you look at it, Parag Parikh has given 13.75 standard deviation, which is the lowest, followed by LIC mutual fund and followed by Tata Flexi Cap mutual funds. The second thing that we need to look at is the beta. Again, beta is the measure of sensitivity. Very simply, let us say if Nifty tomorrow drops by 1%, by how much these mutual funds will drop by. So let us say in this case of, let us go ahead and sort this out. So we are going to go ahead and sort it out by the lowest to highest. And if you look at it, lowest beta is the best because it tells you that if all of a sudden the share market drops by 1%, then the first one, which is Parag Parikh, is only going to drop by 0.69%, followed by LIC and followed by Tata. So from standard deviation and beta perspective, Parag Parikh is number one, and LIC and Tata Flexi Cap mutual funds have shown the best results from a standard deviation and beta perspective. Now comes the Sharpe ratio. Again, it's very, very important from risk adjusted perspective. This is where risk and return get married, right? So Sharpe ratio simply means that if I were to take 1 unit of risk, then out of these mutual funds, which mutual fund has given me the most extra return? So let us go ahead and sort this list by higher to lowest. So let us go ahead and sort this list by Z to A, and we see that higher the Sharpe ratio, better it is. So from that perspective, Quant Flexi Cap mutual fund has shown the best Sharpe ratio, followed by Parag Parikh, followed by HDFC Flexi Cap. Also have a look at the alpha, which is excess return given by the mutual fund as compared to its benchmark. So let us say if the benchmark is Nifty 500 and Nifty 500 has given, let us say 10% returns, how much extra return the mutual fund has given over and above that Nifty 500, right? So here, from a alpha perspective, if you look at it, Quant has given 11.78 and Parag Parikh has given 7.93, followed by HDFC. Now you already see a theme emerging here that from a returns perspective, from a risk perspective, Quant Flexi Cap mutual fund, Parag Parikh mutual fund and HDFC Flexi Cap mutual fund are emerging to be the top 3 Flexi Cap mutual funds. But we really need to have a look at some other parameters to see whether there is any other problem with these mutual funds or not. Let's go ahead and do that now. So what now I have done is I've highlighted these 3 top flexi cap mutual funds, and we want to look at some of the other factors such as exit load. So if you see, in case of Quant Flexi Cap mutual funds, there is no exit load, which is excellent. In case of Parag Parikh, their exit load is 2%, which is extremely high. All other mutual funds, if you see, they are generally up to 1% of exit load, but in cases of Parag Parikh, it is 2%. I do not like. And if you look at HDFC, it is 1%. If you look at the expense ratio, then Quant has the lowest 0.58 and HDFC has the highest 0.97. Again, HDFC is not good from expense ratio perspective. If you look at the number of stocks, again, doesn't really matter much, but we can see that Quant has got 31 in the portfolio right now. Parag Parikh has got 35, followed by HDFC, which has got 46 stocks in their portfolio. Now we look at the turnover ratio, and you will see that Quant has the highest turnover ratio. Now what is turnover ratio? Very quickly, if a mutual fund's turnover ratio is 100%, it simply means that, let us say they have 1000 crores of portfolio. It simply means that they have bought and sold worth rupees 1000 crores of portfolio in the last 1 year. So there is a lot of churn in their portfolio. They are doing a lot of buying and selling throughout the year, and that is what it means. So if you look at this, Quant has got 148%. Higher turnover ratio doesn't necessarily mean it's a bad thing, but it tells you that how much of effort it is going in terms of buying and selling, because whenever you buy a share or sell a share, what happens is you attract capital gain, you have to pay various fees. From that perspective, it is not good. But if you look at Parag Parikh in HDFC, they're almost stacking at the same level, roughly 40% from a turnover ratio perspective, which is not too high. Also, if you look at the last 1 year rolling returns, and if we see that, you will see that from a last 1 year perspective, HDFC has given the best return, 21.44%. If you look at 2 years of rolling returns, you will see that Quant and HDFC are almost stacking same level. But please remember that Quant before 2022 used to be a Quant consumption mutual fund, so some of those returns are playing into it. But overall, HDFC has given the best rolling return from the last 2 years perspective. If we also look at the portfolio of these mutual funds, have a look at the Quant here, you will see some of the good companies here. But one of the worry that I have with Quant mutual fund is that they've got red flags. So let us click on this and have a look at the portfolio. You will see that some of these, Jindal Stainless and Power has got too much of promoter holding is pledged. They have got 2.18% of their holdings into that. It's gone down, which is good sign. But again, Strides Pharma has got a red flag here. Usha Martin has got a red flag. HEG Limited has got red flag. My point is simple here, that Quant seems to be investing in those stocks that have got red flags. They are taking higher risk, right, as compared to HDFC and Parag Parikh. But let's have a look at Parag Parikh, and we will see that from a Parag Parikh perspective, there are no red flags here. And you will notice that some of these investments are in US based companies. For example, Microsoft Corp, they've got 5.3% allocation in Microsoft. Also Alphabet, they've got 4.85%. Amazon, they've got 3.78%. So overall, it feels to me that Parag Parikh invest a lot of money into US stocks. If we come down here and see if there are any other, no, I think these are the US stocks that they've got in their portfolio. Meta as well, they've got 3.62%. So if you're interested in US based stocks, then Parag Parikh is the flexi cap mutual fund that has taken some positions in the US mutual funds. And if we now come to HDFC, there are no red flags, and they're pretty much predominantly all the Indian stocks that they invest in. Now you might ask me a question that, Rahul, what is your final verdict? What is my recommendation? So here is what I will say, that it is your portfolio. It is your money. You take the decision. I've given you a lot of data points that are out there. Please do your own research as well and make the decision. In fact, you let me know in the comments that based on this data, what do you think is the best flexi cap mutual fund from your perspective? And I would love to read all your comments. Secondly, in part 2, I have not yet covered mid cap mutual funds and small cap mutual funds. If you would like me to create part 3 of this mutual fund series, let me know in the comments. Part 3 is needed, and I will do my best to create part 3 of this video. Also, please hit the like button, subscribe to my channel, and I will see you in my next video. Until then, keep rocking.